evening. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Tuesday, tax day, the 15th of April, 2025. All right, my friends, so as we look at what the markets are doing with everything, we should talk about where we're at with this. No, I don't like what I've just done. Oh, I can do it again. Good evening. I'm Epstein, and here we are on Tuesday, the 15th of April, 2025. It is tax day. Be sure you get those in. So let's take a look before we go to the markets at news that's happening tomorrow, because there's a lot of it. You're going to get the Mortgage Bankers Association number at 6 in the morning. You get advanced retail sales for March. That's at 7:30. The Federal Reserve will release their monthly industrial production and capacity utilization data. That comes out at 8:15. Business inventories, at 9. National Association of Home Builders at 9. The Bank of Canada interest rate decision tomorrow. We get the EIA petroleum stocks at 9:30. And we heard today that the Trump administration has pulled another deal, this one negative for NVIDIA, where they're putting licensing fees now on the H20 chips. I apologize for the cough. I'm having the worst allergy attack. Had it yesterday, hasn't finished. System's got to get used to it. And yeah, I do take all the stuff I'm supposed to, but this first one can be a rough one for me. So, in looking at the markets, it's very clear that there's one thing the market's betting on: gold inflation. It just doesn't stop. No matter how the chart weakens a little bit, the market picks up. The stock market is upset with the fact that every single day there's a change to the tariff policies that the Trump administration is putting on. Simply put, somebody has to say it. I don't think they know what they're doing sometimes. I think that the president and his team have had enough time to think this out, where you put them out. You don't make a change every other day, and that seems to be what it is. I get the idea of tweaking, but at the end of the day, you're dealing with the world's largest economy, and it shouldn't have to be tweaked every 24 hours. You may not agree with me, but that's my opinion. When we take a look at the energy markets, you can see that the markets are starting to just stabilize. I think that's a good word for it. If you saw the IEA numbers, the International Energy Agency out of Paris, they're calling that these markets are severely, and the word is severely, going to be flooded with production if OPEC keeps up the idea that it can bring all that oil back to the market because demand isn't there. So we'll see how that works out. Let's take a look, if we could, and go right to the gold market. If the market were to finish right at this minute, you'd be up 0.5% for the week. It's not a lot, $16. You're at midweek tomorrow, Wednesday, but it would be an all-time high. When we take a look at what the June gold is doing, it's up and away. Every time I talk this gold market now, I don't know if you watch that series on Discovery, Gold Rush, when you see what they all do with that. These guys got to be jumping in their boots. Can you imagine Tony and all them? They probably want to get 6 plants going this year. Same with Parker. I watch that all the time. I love it. But you can see how the market has come right on up here, doing excellent, not changing. It's stalled, and it's now at a question mark. Can it accelerate from here, or does it pull back under 3208, and out of nowhere the market looks toppy? As long as you don't pull under there, I'm of the opinion this market still get up and go. The pattern very clear with the lower highs. With the higher lows, higher highs. And here's what's been holding the market. You had to move to the right-hand side of the Bollinger Band, and that seems to be what it wants to do. Now, in terms of being overbought, it is. You can't get away from that. If it were embedded, I'd almost be saying people are just going to be jumping in and keep going and wherever it's going to go. But it is overbought. So I expect the resistance now at the 3,300 level, the upper Bollinger Band, if it can keep climbing to that zone. The June gold, and I think I'll be switching this week over to July silver. That, as you can see, playing a game right here, fighting at the 100 level for all purposes. It's been as high as 122, still looking okay. when we look at silver, I've moved now on the July silver when we review. You're in this whole resistance area. Silver has been a bear market rally. I say that because you're under the 18-day average of closes. On every chart, you should have a bias number, a number that says if I'm over that, I have a bullish bias. If I'm under it, a bearish one. Consider it a filter. I use the 18-day average of closes. The support had been, and it worked there for a while, back here, the 200 in gray and green, the 100. But you gave all that up. So on the way up, it acts as resistance points, and that's what you've been doing. The copper is similar. I've moved to the July copper. Back here, you were fighting a battle at the 200 and the 100-day average and the 18. And from there, the market ultimately made its move to the upside. It then pulled back, fighting the battle right here, trying to get back up to that 18-day average. Platinum market, the same story. I don't have to do them on each one. And you could see now you're entering the resistance of the 18, the 100, and 200 day. So gold is all by itself, as I see it, as a metal in terms of where the strength of this market is. And it's the standout. Bitcoin's not going with it. Nothing else is. It's all by itself. And I think that's very important to recognize. I wrote in my report, because I couldn't speak yesterday, that I thought this market might move to the right-hand side of the Bollinger Band. And now the question is, have we gotten deep enough to reverse some of this break? And I question if that isn't the case. Now, I'm obviously not correct. If you get under the 98.80 level, you can then keep probing on down. Ultimately, our next price count's 88. I don't think you're going there. That's why I'm making this statement. And no, I am not telling you, and don't be a wise guy, Ira said he's bullish here. It's not what I'm saying. What I'm saying is you may have broken enough. There could be some surprises to the upside and some surprises to the downside in the euro. Now, remember, we're going to hear from the European Central Bank shortly. If you like what you're seeing here in these technical parts, you're going to like our guides to technical indicators that covers everything you're seeing right here. They're free. We send them to you as a PDF. You can print them out, read them right on your computer screen, whatever you want to do. But they're full of examples. They're all in color. They come out great from our good friends at the Old Futures magazine. Go to iraepstein.com, research. The reason I keep using this, I have looked at all the new ones that have come out over the years, the ones the exchange has put up. I don't see anything as good as this one. And when something's really good, it's a classic. I'm Ira. You have a great day.